live. Okay, Pat, we are ready to rock and roll. Going to do a couple little adjustments here as the YouTube comes up because it tends to show up on my computer and then I hear you and I talking and then the YouTube talking. So it can all get technically confusing. But hey, happy haircut day.
Yeah, same to you. Hey,
I have a good haircut conversation.
Welcome people to our Zoom. Week what, 5 or 4, 6, 9, 10?
Yeah, more than one. Yeah, I think that's.
I'm glad you could join us on this Tuesday. Is it Tuesday? Wednesday? Sunday? Is it? No, it's Saturday.
It's all blending together. There's no doubt. So I'm going to touch on some local Arizona news. I got a couple surprises there for you. And then I'm going to talk about a bunch of Fed stuff briefly. And then I'm going to ask you to kind of give us some updates on some mortgage changes that we saw this week. But if I look at the numbers, let me go back to my sheet here. If I look at the numbers, a 24-hour hot sheet, and this is kind of what's going on right now, but in the past 24 hours, we've had 660 new listings, and we have 204 homes under contract and 352 that are pending. You know, the same thing. So the amount of new listings that came on matched the amount of homes that are sold. Only 61 homes are temporarily off the market. 138 homes went back on the market. The big change is we have 416 price changes. So we're starting to see more price changes, and nobody does a price change that says, I'm going up. So those are usually price reductions. So that's pretty typical of what's going on in Arizona right now. We're still floating around 14,000 listings, still at historic lows. Buyer traffic is still low, but the buyers that are out there are serious. They are in a position where they can buy, they want to buy, they feel like there's not as much competition, and they're writing offers. So, we'll discuss how long we think that's going to last. But here's another interesting thing in Arizona, Pat. Open Door and OfferPad are back in business.
As I saw that.
Mm-hmm.
Oh, yeah.
So they are, they're letting you go see their homes. So they go in and they sanitize them, and they're letting you go see the homes. Their Open Door is back in the home purchasing business, and they're rolling out a new program. It's kind of complicated. It's a program that will allow you to agree to sell your house. They will get you in a new house and then cash you out of your current home to make that transition smoother. They're trying to work out the math and the fees. Something tells me their fees are going to go up. OfferPad is got their homes back on the market, but they have not turned on their purchasing yet. They're going to. And Zillow has said they're going to wait it out. Now, Zillow came out with a projection that said that real estate's going to go down 3 to 7% this year. National Association of Realtors, or FHA, said no, they're still going to go up about 4%. So there's a difference there. But there's a Federal Reserve report that came out, which was a survey. And the big, no-brainer is 91% of businesses were interrupted for the COVID shutdown. 69% of business owners say it's going to be difficult to get back to normal. 84% of business owners are saying it's going to take more than 6 months after the recovery to start seeing things get back to normal. And they expect not a V recovery, but a W. We're going to go down. We're going to start to come back up, and we're going to go down again before we come back up. And that's what the survey is telling us.
Remember, I told you that 3 weeks ago. Remember, we were talking about that. I said everybody was hearing the V, but then I saw something about the W, and it fit my thinking. The psychology behind it. The V just sounded too perfect. We went down, we're gonna go back up. There's gonna be people that are traumatized. What, 25, 30%? But no, not to interrupt you, but that's perfect.
Well, and I think there's people that don't have any idea what's going on either, like the lady that cut my hair today. I said, so the Nordstrom's up street is closing. It is, how come? I said, well, maybe because it's been closed for 8 weeks. goes, oh, things will be all fine by summer. I said, really? Where are the Nordstrom's employees going to have jobs?
Yeah.
Macy's is probably going to be closed. I mean, it's interesting to watch how real estate is moving right now. But I think, and not to be a pessimist, but I feel more like a realist. I think when the economy gets bad, it's going to take time for people to realize that it's, permanently bad. I mean, we're all hoping, oh, it's going to get better as soon as we unlock, but we're going to have ripples on this. It's going to affect house sales.
Yeah. No, I agree. I mean, it's kind of like what happened in, remember, we talked about this. No, I mean, sometimes some of these things are reoccurring, these things that we're talking about this last couple of weeks, but in '07, remember I was telling you in '07, they said, this is just going to be temporary. It's '08. And then Lawrence Yoon from the Realtors, I think I mentioned a couple of weeks ago, said, we're going to be out of this in a year. And I told a buddy of mine, I said, back in '08, I said, we're going to be in this thing for about 5 or 6 years. And he's like, you're smoking crack. And I just kind of sense that. I think we got kind of the same. People are going to realize, hey, this is worse. It has been bad, and it is going to tail it out. I agree.
Yeah, save your money.
Yeah,
but Fed told Congress to go big, which is interesting. That's like a dad coming home from work and giving his American Express card to his teenage daughter and say, "Go to the mall, go shopping."
Well, I think, can I interject? I mean, I know for people who are watching this, I mean, I don't think we're trying to be doom or gloomers. We're just trying to be realists versus, because you got to be realist versus an optimist. I mean, you want to be an optimist, but I think you have to look at the data that's right in front of you and say, okay, how is this going to, data, obviously the data and the psychology trends, data and psychology, like we talked about the last couple of weeks. But I think it's going to be, there's, but, actually touch on a point. There's like you're saying, there's still buyers out there, but they're serious. There's the ones that are out there buying. What I'm seeing, I got a handful. I can go off of stuff that I'm seeing personally, and what I'm hearing on the mortgage, these mortgage sites is that there are people that are just, hey, I'm going to buy. It's like I'm going to buy Microsoft. And I'm going to hold it long term, or Apple. They're not looking at to trade it. You get the serious buyers that are like, hey, the last handful, half a dozen people I talked to this week about, different, getting pre-quals, like 6 or 8, I think there was people I talked to, they're all 28 to like 34 years old. And they're like, we really, and you and I talked about this. They're like, we're buying a home for long term. And if it goes down 5 or 10%, I just talked to a guy yesterday. He goes, you know what? I'm not really too concerned about, because I want to buy a house that I like and I want to be in for a while, and it's not going to concern me.
Yeah, and they're
so you got to mix that. Both, so we're trying to give our viewers obviously some negative sides, but also positive sides to say.
Yeah, because you've got two different buyers. You've got investors for short-term gains, and you've got families that want to get a home and they want to stay in it for years and years. So when I say that things are going to get pretty bad and pretty tough, that shouldn't affect the decision if you plan on staying in a few years. It's more of an opportunity for you coming up, because now you don't have multiple offer situations. I mean, I know the offer that we're waiting to get accepted that we wrote yesterday, we're the only offer right now. Now in March, that party would have been over in just a few hours.
Yeah. I mean, exactly. I mean, a couple, 2 hours, and so it really does cut back to the the demographics of people are buying, for these people out there, we're, like I said, I think we're trying to paint a realistic picture, but, for the people that are renting right now and, renting an apartment, they got 2 kids, or they have a kid, they're looking to have another kid, they're looking to move out, it's not realistic for them. Quite honestly, it's a good thing that they're looking and they're serious, because, if I was in that position, I've got a wife and 2 kids and I'm in an apartment, I don't want to wait, even if people, you and I say, hey, or, the experts say, it's going to be another 2 or 3 years. Do you want to be in this apartment for another 2, 3, 4 years? They're saying, I'm seeing this group, this segment, these, the younger, these people are smart, they're being smart about it. Like, no, I want to be in a house, in the next 6 months and not be waiting for it to bottom out, so let's just say, hey, well, you and I are the experts and everybody comes to a conclusion, the bottom is going to be 3 years from now. there's a big segment out there that is not going to wait 3 years to buy a house.
No, not at all.
Not
at all. So tell me about what went on with jumbo loans this week, non-conforming.
It's been brewing the last couple of weeks. Specifically, it's been brewing the last 2 weeks or so. That market is really tightened up on the broker and the banking side. The banking side, some of the banks, the big banks, are going strong. You got kind of a two-edged sword, because you got the bigger banks like, say, Wells Fargo. They love their jumbos. I don't think it's as affected them as much, because they use the jumbo market as a market capture, market share capture with some of their wealthier clients. They say, hey, we'll give you $1 million loan, but we want you to transfer your monies over here. So the big banks are using that. But on the problem is with the bigger banks, obviously it's going to typically take a little longer. That's what here's the wording that I've seen. The words I've seen is that it's not going to be an easy process. But they're typically, bottom line is, they're tightening up, wanting reserves. Typically, jumbo you could get away with. There was, back 6 months ago, there was you could get jumbo 10%, but now it's really 25% down for jumbo.
And jumbo's anything over 512,000, right?
Yeah. Yep. 510,400. So
I wonder how they come up with those numbers.
Yeah.
How long were they locked in a room going, no, 512,500?
Yeah.
No.
Well, FHA is $331,760. I mean, just round up, round down, make it 335. Just so people, I think they do it so guys like me have a hard time. Somebody asked me, what's the FHA mortgage limit? I'm like, let me see. It was 294,515 back in 2016, and then 2019 it was like 314,000. Let's see, $314,327. Just round up, round down, just make my life. But I think it just to make everybody's life, more difficult.
Yeah.
I don't know the math behind that. It just blows my mind every time I see the mortgage limits changing every year. It's like, $510,400. Let's make it 510. It's just, geez, I mean, really, are you serious? God, that's the stuff that that's the politicians making this stuff sometimes up. It just drives you nuts.
Yeah.
No, but bottom line is the jumbo market has tightened up. I did a jumbo loan about a month and a half ago. I closed, for example, how the pricing has changed. I did a jumbo, a 3 3/4 30-year fix for $1 million loan. And I gave the guy a $3,000 credit toward closing costs. Last week, I went to price out that loan, and the lender that I sent it to is no longer offering a jumbo at that price. And there was only 2 investors that were there offering that program. And it was 25% down. And the rate was approximately 4 3/4 to 5.5. And I think at 4 3/4, the buy down was $110,000. So I went from a $3,000 credit, giving the guy to cover his closing costs, to a $110,000 cost. So it just goes to tell you that the lenders are just pricing up these jumbos, saying, we don't want these. Because basically the thing with the jumbo market, they don't have the coverage like FHA or VA or these the FHA, FHFA, Fannie Mae and Freddie Mac. They don't have the government coverage. A lot of these jumbo loans are basically, non-government secured. So if somebody, they are seeing people, I read something that the jumbo market, there are people that are, jumbo, especially California, they're going to get, it's going to be very interesting over there. But, there are people that, have done a jumbo loan that are asking for forbearances, obviously. So, and they have no cover. I mean, they're basically out on a little boat on a little island. So that they've tightened up 25% typically down payments. So that market is going to certainly probably have a little bit more of effect, on this whole downturn. I want to touch, do you mind if I jump into, so that's pretty much on the jumbo market. It's just, jumbo market, and also the self-employed, they're obviously, if you're self-employed, you just gotta be ready, just button up the hatches and, they want six, if you're doing like a refinance, they want to see 6 months reserves for PITI, principal, interest, tax, and insurance, for if you're doing a cash out, if you're self-employed. They're just tightening the buckets right now. And you're going to see these buckets tighten for next, I really think my, my little horoscope, or in the future, you got to, 3 to 4 months. If we get by that and they can see a little bit more, it's just, it's they're running in darkness right now. So it's still going to be tough, and everything is just tightening across the board. But I'm seeing loans go through. So it's just, people just have to be patient and get the stuff that they need. Loans are going through. So, and I'm not having a tough job with with verification of employments. It's been a lot easier than I thought it was going to be. They just verify up until the day of funding. So things are moving. Mortgage lenders and bankers, brokers are, we've been busy. They say rates are all-time low. I saw some stuff here the last couple of days. Rates are low, but they're still not. Lenders are busy, but they're not at the all-time lows they were in end of February, beginning of March, because there's still that volatility premium that we, the lows were low threes for a 30-year fix. Now we're talking low to mid threes, 3.5, 3 and 5/8, 3 and 3. Some days you can get 3 and 3/8 with. Typically, right now it's costing people, in my experience, 3 and 3/8, 3.5. You might have to, maybe use 20 basis points, 25 basis points to get down into that figure.
So Treasuries traded in the futures market into negative territory last night. So
yeah, it's there's a decoupling with the Treasuries. It's almost like watching Treasuries and mortgage-backed security market. The spread after, like, in the end of March, the spread was like 2 points, and now it's coming back down. Usually it's about a point or so, and it's spiked very hard. Now the range is coming back into normal, but it's still hard to watch. It's two decoupled markets, though, the Treasury market and the mortgage-backed security market still. The last week and a half or so. Like I said, bottom line is touch on just to summarize, jumbo markets, are just that's going to be tough. And I think it'll loosen up eventually. One thing I'm going to go off. Two things, or one thing I want to go off of real quick here, just to talk. We go back to the forbearances that we talk about every week. The week before, 2 weeks ago, it was 3.4. Last week it was 3.8 million in forbearance. Now it's 4.1 million that are in forbearance. And I haven't talked to you about this. I know we talk offline, but something's kind of telling me that I pulled up the foreclosure numbers. And I just want people to think about this. I think this kind of bodes positively, even though we're, it's like you said, you and I are talking about the fact that, things, you had said, I had said that, hey, if you look at the market, it looks that, everything pointing at it says it's going to go down. It's just going to soften up some bit. But I'm just kind of digging behind these numbers. The forbearances are 4.1 million. But I went back to the foreclosures that happened 2008, 2009, 2010, 2011. And in 2008, there's 3.1 million foreclosures. In 2009, there's 2.9 million foreclosures. In 2010, there's 2.9 million foreclosures. And in 2011, there's 2.6 million foreclosures. Just for a point of topic, I'm not trying to make a specific, I just want to share this with viewers. Yeah, we have 4.1 million forbearances, and I haven't talked to you about this, and I'll throw this out at you. It's just for discussion, topic of discussion is that, well, we got 4.1 million variances. I'd like to know the numbers, and this is for people to think about. Is like, it's a negative number, it's a bad number, but how many of those people, have got equity that they're going to eventually try to save? It means, yeah, they're foreclosed, they're forbearing the payment, but who's to say that they don't get things restructured? Now, if they do a forbearance, as I told you a couple of weeks ago, there's probably going to be implications that they won't be able to do anything like refinance or purchase for what I'm hearing, and it's not been said yet, you know, it hasn't been publicly said by Fannie Mae, or, you know, I haven't seen it. I saw another loan officer that was talking about this. It really hasn't been publicly said what they're going to do, but I've been hearing that for 12 months, they won't be able to do anything. So I guess my point, you know, hopefully I can make a point here is, you know, we had 3.1, 2.9, 2.9, 2.6 million foreclosures. Those are foreclosures. Those are houses that were gone. And
Yeah, I don't see that. I don't see that happening at that rate, because the average equity in the United States is $174,000.
yeah.
That's average then. And so, you know, the average homeowner has a net worth, I think, of 270,000 right now, and the average renter is 5,000. And
Yeah.
so the being close to foreclosure is not anywhere near like it was, you know, during the last crisis. And what was really causing the foreclosures last time was they had the promise of equity, but they had notes that reset. So they're sitting there with a 1% mortgage, and they're calling the bank and saying, what can you do for me? And they go, well, it's going to go to 7%. So you're going from 1% to 7%. So your $1,100 payment is now $2,200.
Yeah. And on top of just jump in real quick. I mean, sort of interrupt you, you know me, but, and then you take an example. I saw these examples happen in live action, you know, live time. You know, you had one person owned a house and they owned 5 other homes, and those 5 other homes were maybe purchased. There was 100%. There was just before the crash started, or, you know, just at the tip of the start of it, you could buy a house. I mentioned this, I think, a couple of videos ago. I remember this last program that came out was for, if you had a FICO score of 620, you could buy a non-owner occupied, so basically an investment property on stated income with a 620 FICO score, 100% financing. So that isn't even, you know, if you brought that program up today, people were like, no, there's no way, you know, those programs were prevalent out there. So that is, I'm trying to shed positive light on this and what's negative.
There are a lot of people that own multiple homes, and with
they just let all 5 go. He let all 5 homes, like, you know, I'm done. I'm just gonna let all 5 go. Yeah. And you don't see that. That's not, you know, quite the case. But so I just wanted to kind of bring to the audience, the millions of people watching this, millions, tens of millions, you know, but that are watching this, there's forbearances 4.1 million, but, you know, so how many of those will actually go to foreclosure? You know, it might end up only being, say, maybe let's say 500,000, you know.
I don't think it'll be enough to move the bar. I don't think it's going to be a statistical. No.
So I didn't throw that out to you recently, but I just started looking at that today. I'm like, I'm going to go back and see, because, you know, we talk about foreclosures in 08, 09, 010, but I was like, I know there was around 2.5 million, you know, here and there, but I wanted to pull up the exact numbers. So while it's negative, I mean, there are underlying, you know, forces that, you know, and I think this goes back to us, as, you know, what you were talking about. It's going to soften, but, you know, a lot of people are waiting for just a crash. I just don't see it. And one last thing, I think you and I were going to talk. I'll let you talk about this too. Is I've been talking to the number of people I've been talking to recently, the last 3 to 4 weeks, has been these, you know, the younger generation, 28 to 34. That, like, you know, I kind of alluded to this earlier in this video just a couple minutes ago, but I'm really, these guys they're solid. They're savvy, market savvy. They want to know about owning a home, and that just makes me, I don't know, I was a little negative a couple of weeks ago and frustrated, but seeing some of these guys pop out of the woodwork, and not like, hey, I'm looking to buy a home. I'm not looking to flip it. So that bodes well for the market too.
Yeah, my web traffic is way up, and they're waiting. So everybody's waiting, but it also kind of shows you nobody wants to be a contrarian. You know, nobody wants to say, well, I'm going to buy when everybody else is out. If that's the case, then you know, pay attention, and because there's some nice places popping up right now. They're not bargains though. So I don't think, you know, we're not going to have an answer on whether or not there's any bargains out there for a year. So October's the month. October is, we're either flying or back in the saddle, or it's really bad. So, and really bad, I mean, economically, that, 25% of small business didn't open up. Our buyer traffic's gone way down. And I think our listings are going to slow down. Nobody's going to dump their house on the market. They're just going to hang on to them, like they're doing now. I'm not going to list now unless I'm being transferred. The listing I've got coming up next week is because they're moving to North Carolina. So they're retiring. So that will continue. That'll happen. One of the offers that we wrote the other day, that family's moving to North Carolina. That's just coincidence. Everybody's moving to North Carolina. But I think we're just going to muddle, and we may see in August buyer traffic start to come up, inventory maybe start to come up. But if it doesn't catch on, October could be rough.
Yeah. It kind of goes back to that.
So we have a question from Jared saying, why is October the inflection point? That's a great question. And I think it's a psychological thing, because we're expecting sales to spark, and the month that everybody's tossing around is July and August. And if it doesn't go in July and August, then by golly, it's going to be September. And when you get into the final quarter and business has been bad since April, it's hard to spring back when you're looking all the way out to the month of October. I just think it's like a car that's going to be out of gas. If it's not good in October, it's not good because of a struggling economy that didn't recover. So that's why I think I call that the inflection point. Would you agree with that?
Yeah, no, I think because you figure May, June, July, March, April, May, June, July, August. July, August, we should, the forbearances. So then you got to give a month or two to kind of. It's only you just have to look at human psychology. And
well, next week the restaurants are opening, right?
Yeah.
And retail's starting to open. So what's it going to be like next week when the restaurants open? I mean, they're planning on only having 30 to 50% occupancy. Yeah. So they're not going to be open and full. You're going to have this chair and then this table. So you're going to be going into businesses that are not operating full tilt, and their expenses are going to go way up because their cleaning standards are going to be exponential. They're not just wiping things off. You leave that table, they're sanitizing it. It's going to be higher labor costs and way lower volume. Well, is that going to go away by October? I doubt it.
No.
And so, and then by October, you're kind of thinking about Christmas presents. So
Thanksgiving and Christmas.
Yeah, so it's going to be interesting to watch. But hey, Jared, thanks for that question. So
yeah, it's just nothing is, you and I were talking earlier this week about people, you've had response. I've had not too many people say, well, I'm just going to wait and see what happens. Those people, there's a segment there that's like, okay, you're not serious. And then you get that segment is like, hey, like we talked about, like the people I've been talking to in terms of buying a home, the guy says, hey, I'm paying $1,600 in rent. And actually, there was a lady that I did a pre-qual today or the other day for. She was paying $1,600 in rent, and she's buying a home for her monthly payments could be $1,450. So she's like, I gotta live somewhere. And that's her philosophy. She basically said, I got to live somewhere. Why don't I just start putting money away? I'm going to be building equity. Yeah, the market might slide a little bit, but, so a portion of that's going to be going to principal. And I'm getting I'm getting a great rate right now. If, like I said, looking out 6 months and 12 months down the road, if rates go from 3.5 to 4.5, 4.75, I mean, they were the end of, middle of 2018 to end of 2018, rates were, high fours, low fives. So there's a balancing effect that we're seeing. Like you said, I've been amazed at the millennials, the younger, kudos to them that they're kind of moving forward and they're kind of thinking a lot more logically than people were back in 06, 07, 08.
Yeah, yeah.
I'm seeing that. I'm seeing that. Yeah, I'm seeing a group, a segment, a segment of the population that is much more level-headed when they buy a home now than they did in 05, 06, 07. You mentioned this, I think, on the last call, or maybe talking on the phone, that people in 04, 05, they're like, I got to buy. I just got to buy because I got to buy. Everybody else is buying. And that's
If I
not,
don't buy now, I won't be able to afford it.
yeah. Yeah. And you're not seeing that. Like you said, you were talking about the one thing going up and, the crash. You're not seeing that. I'm not seeing that, that type of craziness. I'm just seeing a very level-headed buyer that says, hey, I've got 5% to put down. I've got 2 kids. I've been renting. It's $1,700 in rent. I can get a house for $1,500. I'm just going to do it. So that I've been, like I said, my emotions have been going up and down. I've been looking through the data, but I'm like, I'm starting to see. That's why I wanted to bring up the forbearance and the foreclosure, because a couple of weeks ago I was like, I was really zoomed in on the forbearances, and I got to thinking the last couple of days. I'm like, okay, yeah, all those forbearances aren't going to be all foreclosures.
No.
They're, like you said, out of those forbearances, I would love to know out of those 4.1 million. It'd be interesting. It'd be hard to find those numbers. Obviously, if I ever see that number, I'll jump on it. But out of 4.1 million, how many people have $50,000, $100,000 equity in the house? So,
yeah, and will Congress jump in and just say you need to take the money owed and tack it on to the end of the loan?
yeah.
So in other words, when the
like I said, it's going to hurt. It's going to hurt the person. It's going to hurt. The 4.1 million of those people, if they're looking to refinance or do something in the next year, that market will be, that they're going to be kind of, locked into doing something. But what about the other people that are around that are looking to do something? They can't do anything, but there's still demand. I mean, the home starts have obviously softened, so people are still out there looking. So,
well, Pat, we got a new question from Andrew. He said, how do you think the elections coming up will affect interest rates? I think it's a non-event.
Yeah. I mean, I've been in finance, I'm just going to generally, I think it's a separate thing. My response the last 30 years being in finance for the last 30 years, I was a stockbroker for 10 years and doing this 20 years. Every time you get a election, everybody, I hate this not to sound talk rash, but everybody uses it as an excuse. I'm going to wait till the election to see what happens. And it's just, life goes on. We get a Republican, Democrat. It's not like after, obviously.
There's no direct connection between us switching presidents and the treasury market. I think there is a connection with people's emotions, and that affects buyer traffic. I saw it in 2016. A lady, I talked to her on the phone, and she said, I'm just going to wait till after the election. And I said, what do you think's going to change? She goes, I don't know. Well, guess what? It took off. I mean, real estate was flying. So I think it does affect here, but it doesn't affect the math.
No, the math, that's my whole point. After over 30 years, I've never seen the math, after any election say, oh my God, I've never had come to think of it, I've never had anybody call me and say, I'm glad I waited till after the election to do something, because it's life as normal November 3rd, after November 2nd.
What's going to affect interest rates is, the Fed's made it very clear that they intend to inject as much liquidity as they can to keep from having any problems. So they tried raising rates in 2018, and it was disastrous right away. Yeah. And sales slowed down, and GDP went from 3% to 1%. So they know that in the middle of this crisis that they can't raise the Fed.
They're going to do everything in their power, because we saw exactly 2018 when rates went to mid, high 4s, 5s. We've got an appetite now for low interest rates, and they know, like, regardless whether there's a Republican, Democrat, or libertarian in the office or whoever, independent, the Fed being separate of that, they know they're going to have to keep rates at a stable, mid to high 3s, 4% If it gets out of hand, all bets are off. So regardless of the election, the Fed is going to be separate, making a separate decision.
We
based
won't
on
see
that.
rates going up until we start seeing some traction that inflation is going to be a problem. And their inflation target's 2%. Right now, the Fed is projecting that they're trying to keep us from having a hard deflationary time, things crashing. And I mean, they're injecting trillions upon trillions of dollars into the market. So inflation will eventually start rolling in, but that's a good 18 months to 2 years out.
Yeah, yeah, exactly. So that's a good question. I mean, because
Yeah,
everybody's
yeah.
wondering what,
Thanks, Andrew.
the policy. I don't see, you're not going to see if Biden does get in, you're not going to see, and it's like I said, over 30 years being a stockbroker and then doing this 20 years, you get the elections and people say, I'm going to wait till after election. And then a month later, you're like, geez, nothing's really changed. We're just moving along, same old, same old. And
Yeah.
it's like, okay, if you're serious about it, it's really, I think, and the bottom line is it's a I hate this, it sounds kind of curt, but it's kind of a non-event. I think, nobody's ever said, I'm glad I waited, the only thing I think was amazing was after Trump got elected, look at how they said, the market's going to crash, and it just took off. So people that waited, I mean, they were chasing a horse.
There was a lot of negative thoughts going around that if Trump got elected, that the stock market would be in the tank and that real estate was going to tank. And unrelated, I went on a tour down in Panama in January, and the gal that runs this tour, it's a relocation tour in case you wanted to move down there. She said every election year, she has to double the amount of tours that she has because people are like, oh, it's going to be bad. I'm leaving the country. And so she had all these tours booked, and now they're all canceled. And in Panama was a dry country during their lockdown. You couldn't buy any alcohol. So the president of Panama this week said, okay, I'm lifting that ban. Local mayors have come in and said, nope, you can't buy alcohol. They have that much control, the local mayors. And so I asked her a question. I go, why are they doing this? She says, well, they feel that the Panamanians are so poor, this mayor, that if they get to buy alcohol, they'll buy that instead of food for their families. I'm thinking, there's a country that tells you what you can and can't buy. I hope we don't ever get that way.
Crazy.
It's nuts. Crazy. Well, Pat, thanks for the update. Let's hold our breath this week. What we're going to expect next week is the new stimulus program is supposed to be rolling from the Senate to Congress or vice versa. There's like 3 different plans out there, and they are wild. So hold on to your seats. It's going to be something to watch.
Yeah. On one ending note, the unemployment numbers came out, and obviously with their bad numbers, but the market just kind of, if it would have been any other market, where obviously the numbers are rival the depression. I mean, we're almost getting used to this now. It's the new. The unemployment numbers, like, okay, another millions and millions of people out of work. Well, it kind of just shows you how the market's kind of settling to the news too. So that it's kind of getting used. It's helping, and if we get obviously an upturn, I found it very interesting how they reacted today.
I'm heading down to Ocotillo on Monday to the Casual Pint because they said they're going to be open. So.
Cool. Well, thanks for everybody you're watching. Thank you, Rick.
Have a super.
Hopefully some people glean some information from this from 2 guys that
or farts in the room.
Yeah. All right, sir.
See ya.
Talk to you. Bye-bye.